All right, so markets are flat to up a little bit today. It's a far cry from Friday's action. Great time to talk futures with Jim Cagnina, Senior Education and Trading Specialist for the NinjaTrader platform. We're going to break down how to approach markets that are on the feel like they're on the precipice here, right? Like we're on the precipice. We're at right near the low of the year. And everyone seems bearish right now. So what do you do, especially if you're trading futures, if you're trading stock futures, oil, gold, treasuries, crypto, whatever? Jim has thoughts, and let's go for it. So smash that like button. This is Futures Trading with NinjaTrader starting right now. And here is Jim Cagnina. Jim, how is your day going? I hope a little better than Friday.
You know, we are living in interesting times, Spencer. This is such a unique marketplace. When I woke up this morning, Monday, I was like, my hair was on fire. There's so much stuff going on, and through the open, a lot of interesting things, and a lot of people talking smack. But let's just be calm and carry on.
Okay, let's be calm and let's start. We'll run through the markets here as we do. If we can get your charts up on the screen here, and let's start with what is this? This is the E-mini S&Ps, but this is not your usual chart. Looks like
right. I added this extra chart here. This is a weekly candle chart, right? And so often we're used to looking at daily charts and 30-minute charts and 15-minute charts. So I thought, well, let's take a step back and see where we're at here. This is a weekly, and you can see it's pretty bearish, right? And we're making a double bottom here. And we've had this big debate internally with my colleagues at NinjaTrader. When is it a bullish reversal pattern, right? When is the double bottom really a bullish reversal pattern? And it's not here. It's not. I don't think it's here, but it's impossible to predict, really. So we're gonna, the nice thing about futures trading, you can go long, you can go short, you can express whatever opinion you want and participate. But right now, it's looking pretty bearish here as we're making new lows on a weekly chart basis. And just let me show you, just shoot over to a daily chart real quick while we're looking at this thing.
Yeah.
And the daily, then I think it's more pronounced, right? Because you see all of the individual days, very few up days, mostly down days. Pretty strong, hitting that. We just hit this, almost hit this dangling wick right here. We had on the 24th of February, 40.92. That's been my target. So that's the story with stock index futures. They are looking pretty weak for sure.
I want to back up a little bit to last week. Obviously, Jim, when last we spoke last Monday, the market was certainly down, but it wasn't down with anywhere near the same ferociousness as we saw to end the week there. So I would just like your take on what you saw on Friday and how and just what it felt like to you. Like, did it feel like quote unquote like orderly or you know what I mean? Or I guess like from your vantage point.
From my vantage point, I felt like there was a big flow of funds out of stocks, out of equities.
Okay.
And probably long term, probably there was a lot of folks freaking out saying, get me out, calling their financial advisor, get me out. I don't want to be, real rates are almost positive now with the treasuries. I want to kind of pivot. And I think we saw a flood of that, not only on Friday where my crosshairs is right there, but also on Tuesday where I think this triggered 426 candle triggered the phone call to the financial advisor. Because we really started making new lows here, even though we had a couple of days up days, but this was the true flood on Friday. That's my gut is that money flew out of equities into fixed income, into commodities, into cash, into, hey, I'm calling a timeout here. This thing can go to zero. And I think you have a lot of that psychological battle that happens in people's heads, and rightly so. So I think that's what we saw.
All right, fair enough. I would like to go to the NASDAQ here because everyone everyone saw that stat over the weekend, right? It was the worst month for the NASDAQ Composite Index. NASDAQ Composite and NASDAQ 100 are different indexes, but they're used interchangeably. Worst month for the NASDAQ Composite since October of 2008, Jim. So pretty brutal performance there in April. Obviously, the NASDAQ skews tech heavy, so just a pretty bad month for tech. And I guess, it's doing, it's we're up a little bit today, right? But it's just one of those things where it's the same story. We're right there at support.
Yeah, and earnings didn't help much, Spencer. I mean, as part of that whole flush out, the earnings reports, last week, and there's more this week as well. But some of the big ones, as didn't meet expectations, I'll say. And so you saw a lot of that. And, the NASDAQ is notorious. NASDAQ companies, the NASDAQ 100 components are notorious for borrowing, right? That's the conventional wisdom. And now that rates are going up, it's going to, they're going to have to reevaluate getting capital in.
Yeah, sure. So do you have any take? I mean, the fact that you started this off with a weekly chart screams like that you are screaming everyone like hold tight, right? Because like you're zooming out, which means you are trying to kind of get a clear head here and try to ignore the noise. Same idea here for the NASDAQ as the S&P.
Yeah, I think this is the weakest of the stock indexes. Is the NASDAQ when you compare them with the S&P and the Dow. Russell's also pretty weak, but this one I think is not only the most volatile, but I think it's kind of weak right now. So you do have to be careful. I'm not in panic mode myself. I do see more downside.
Yeah,
I do see more downside, but if you're a passive investor and you're patient, then maybe you would consider hanging in there. I don't know, but for me personally, that's kind of my opinion. There's going to be a little more downside, but when we look at the Fed funds tool and we see all of the interest rate hikes that are baked in the cake already, I'm quite frankly surprised we're not way further south than this.
And why? Just coming off of earnings, you mean?
Well, no. Let me show you the Fed fund tool real quick.
Oh, okay. Yeah. Oh, yeah. So the market has already priced in whatever it is to interest rates at 2%. Interest rates right now we're at a quarter point. We've only had a 1 quarter point hike so far. We're going to get more this week, is what you're saying. But the market is so far ahead of the Fed that. And it might be helpful if you could zoom in a little bit, Jim. But the market is so far ahead of the Fed. Here, I got it.
Thank you.
Yeah. Okay. So I hear you. I hear you on that.
Yeah. So what I'm trying to say, I should have been a little more articulate, is when you look at stuff like the Fed funds probability tool, right? And this just adjusted today a little bit. And you go all the way to December. These dates represent FOMC announcements. Right. So every 6 weeks or so, the Fed does their thing, right? They have their open committee meeting and they vote on stuff. And, Fed funds target rate's the main thing. In this meeting this Wednesday, it's pretty much baked in the cake that there's a 99.8% chance we're going to get a 50 basis point hike. But more interestingly, going forward here, June, a 91.3%, another 50% hike. And then in July, an 89.4%. This isn't a small percent. This is a big percent of another 50%, right? And that gets you to neutral by a lot of folks' definition, that 2% Fed funds rate being neutral, a little bit over neutral maybe. And I think when the market's forward thinking, and when it sees this stuff, it prices accordingly, and investors kind of price accordingly as well. And, I'm going all the way out to December, and we're looking at a 45% chance we're just short of 3% on the Fed funds, and that's no longer neutral by most folks' definitions, most economists' definitions, which means it's a tightening kind of thing. And when I see that, I'm surprised the market's not even more lower, to be honest with you. So I think there's going to be some resilience at a certain point here.
All right. Let's go back to the charts here, Jim. And I want to move away from the stocks for a second because everyone knows the stock market has been pretty bad. But what about other markets? How have we looked? And because that's always the question, right? It's like, where is the money rotating to? Where are investors hiding? And right now it seems like there is nowhere to hide in some respects.
You're right. I mean, this is probably the most interesting chart that I have up, to be honest with you. Gold is literally breaking down. We're in a bear mode, a big time bear mode right now in gold at 1860-ish, give or take. And the retracement is going to be complete at a certain point, which is kind of surprising, thinking, is this risk on, risk off behavior? Or is it money moving to different places? Remember, gold is kind of that flight, I don't know if you want to call it safe haven or risk off place folks go. Certainly we saw that when the war started over here, when we were over 2000. But it's kind of on the downside now. It's really surprising to me. I'm very bearish here, and I expect it to continue on the downside. We'll see what happens here, but this is probably the most shocking chart that I have up.
Wow. Oh, that's saying something.
Yeah, I know. It's just not intuitive, right? So intuitive, we're all conditioned. We all have this, cognitive bias because we've been growing up with these TV commercials for 20 years. How the coin people are trying to sell us coins, because it's an inflation hedge or whatever. But anyway,
I don't know. That's what they've been saying every evening.
We can't sustain ourselves over 2000, and we never have been able to. This is encouraging though too. Crude oil. We had, the Baker Hughes rig count last week. We added a few more rigs in North America, in the U.S. And I think that's been a consistent trend up from last year. Right now, we're seeing some sideways action in crude. I know we're over $100, and everyone's like, "Oh my God, my hair's on fire," but we know the trend is no longer just bullish out the road. It's finding its own equilibrium right now in crude oil, which will be good domestically because we need crude to do stuff, produce stuff, and then to go on vacation and to get to work and all that stuff. So this is kind of encouraging. We're this market being a little bit kind of sideways, finding equilibrium right now, right at that 20-day moving average, around 101-ish. And we'll see if that continues or not. But we're not in bull mode anymore here.
Oh no, I know, and that was like one of the saving graces, right? Is that, well, at least we have energy, at least we have oil, at least we have natty gas. But
yeah. Now, natural gas is a different story because it's it's priced extraordinarily high given history, right? All-time high was up here. I didn't do a present value calculation from 1920, but I'm pretty sure this is pretty much an all-time high. We're encroaching on that. A lot of liquefied natural gas is being sent over to Europe from the U.S. So the supply and demand equation, there's a lot of demand for it. So that's what's occurring here. So this one's a little bit different because we are exporting a lot of this stuff, and as opposed at a percentage basis when you compare it to crude oil, it's a little different. So that's the thing. But we're coming into the spring and summer now, so hopefully it won't be a problem for most residents.
Let's move on here. So many other markets. Where do you want to go next?
Well, let's one other kind of good news market. Let's go over to wheat.
Yeah.
So again, wheat is very and these are wheat futures. You could trade wheat futures with NinjaTrader really easily. NinjaTrader platform. We're kind of sideways. We're oscillating around, right? I had a channel drawn there. We kind of broke out of it for a little while. We're oscillating around. We're not trending up anymore. This is also a pretty good sign for overall for commodity prices, right? Wheat's a very important component to the world for sure. And then corn's the other one, right? Corn's finally broken up. We finally established a top in corn. Corn's finally breaking down a little bit. I know one day doesn't make a trend, but we'll see if we stay out of my channel here. This is a big deal because, again, US, Argentina, Brazil, and Ukraine are the four biggest exporters. Ukraine's, they can't get winter wheat planted. They can't get, the distribution chains all messed up there. So US is going to have to step up, which I think we are. So is Argentina and Brazil. But again, it's good to see that little price relief here for corn.
I guess good from a consumer point of view, not good if you're speculating on going long on futures, but good for everyone else. So
yeah. And I'm talking from an economy point of view. I'm trying to calm everybody down and not.
Right.
Here's another really fascinating. This is a Japanese yen chart. I mean,
Japanese yen. Okay.
this is
Yeah. We talked about this a little bit last week here. The yen is crashing against the dollar.
Yeah, and they've in Japan they've done some stunning things, right? They're fixing the price of their 10-year treasuries and basically saying every day we'll buy as many as anybody wants. We'll just keep buying. So this had this kind of a negative effect on their currency right now. And we have this really clear and present kind of descending triangle on a daily chart. And remember, descending triangles aren't always bullish. Textbook says it should be, when we get to the end here, we're going to rally back up, and we might, but I've seen these triangles break out either way, downside, upside. It's really a breakout formation in my mind. But in any event, that's going to continue so far, I think, with the yen.
Okay. Is there any market that you can point to, Jim, and say, hey, this looks not bad from the long side?
I don't, I don't think so.
I didn't even say good. I said, hey, not bad.
Even when we look at
to me, there's a difference.
Even when we look at Bitcoin, I mean, this is interesting in Bitcoin for sure. This is the micro Bitcoin traded at the CME group, keeping a daily eye on this thing. And I drew a rectangle just to kind of, loosely kind of visualize an area of support. And we have one. I'm going to put my crosshairs to the bottom of the body of the candles, 38,270. We're holding, right? 1, 2, 3, 4, 5, 6 days in a row. So this is kind of interesting. Even though the trend is negative, we're closing below the 61.8% retracement. I'm wondering if this is actually going to hold the support, and we could see some appreciation. I'm even going to drag this all the way out here. So I'm less than positive here. I'm less negative here. I'm going to put it that way.
Well,
as I look at this area of support here for Bitcoin, and it's been a roller coaster. But everything else is down. I mean, bonds are down. Treasury bonds are breaking back into my channel here. We have a 139 handle print right now. It's 139.04. We're about to be at 138, and probably, in my opinion, 137 or below. So that will be again. It's down. That's an advantage futures. Advantage goes to futures. You could sell short.
Yeah. So maybe you want to talk about that, Jim, like how you, like as a trader, how you approach markets like the one that we're in now, where it does seem like everyone is bearish, and so maybe how you approach it from the long side and or from the short side.
Yeah. Okay. For sure. So I'm looking at, this is really one of the strengths if you're day trading futures, the ability to go long or short, and also the ability to see volume data. So if you look at my histogram bars, and Spencer, and we talked about this before, but we might have some new folks in here. This just is tracking the amount of volume that's traded at any given price throughout the session. And today it's looking relatively close to a bell-shaped curve, not perfect, but it's okay. And the dark blue areas here, the dark blue histogram bars represent one standard deviation worth of volume. And as you notice today, we've had a swing high to a swing low, with these great big wicks in between, and then a swing back up high, a swing back low. In anticipation of the FOMC meeting,
Yep.
I oftentimes see this kind of variation above and below the point of control all day long, right? So if you're trading the value area, you're buying dips when we get below that bottom blue line, and you're selling when you get above that top blue line, and you're just kind of trading around the value area in anticipation of the middle part, the point of control, that big golden bar representing like a magnet, right? Eventually it attracts the price back together, and you've seen that really nicely today. And I would continue and say, hey, listen, this is good. We have 3 days of this, because again, we're in anticipation of FOMC.
Mm-hmm.
Here's last session's point of control. Look at that. We're exactly at the same place. This is Friday. This point of control is in the same place, representing either market happiness or just kind of market wanting to sit there and wait to see what happens on Wednesday. So it's a very important level to me, but you could trade around it. I think it's it's every once in a while you will have a breakout and you're going to get stopped out and you're going to lose, but sometimes, hopefully more times than not, you're going to be successful.
So just to repeat that, you're trading using the point of control as like a magnet.
Yeah, this is where the most volume is. This is where buyers and sellers agreed to do deals most of the time. It's in this particular case, it's relatively normal distribution or a Gaussian distribution, a bell-shaped distribution. And you'd expect less volume at the bottom, less volume way at the top. And you just kind of look at the bell and say, all right, this is this area right here. And, it's been very popular most of the session. And why wouldn't it be popular the rest of the session? What news, what events, what other things could change it? Well, anything's possible, but really the focus is on FOMC, I think, this week.
Yeah. We should mention, Jim, that in addition to the FOMC, there was also a jobs number on Friday that is sure to impact things. And then maybe this is like the timing of this perhaps is not ideal, right? Because the Fed always talks about how they're data dependent. Well, now the Fed's going to have a meeting, and then right after that meeting is going to be one key data point on Friday and another key data point, inflation, next Wednesday. So there's two key data points after the Fed meeting that now we have to wait till the next meeting in June for the Fed to really address, right? So, so I on the one hand, the market is certainly very convicted on a half-point rate hike. I mean, it's like a 99% chance of a half-point rate hike on Wednesday. Beyond that, the majority of the market says a 91% chance of another half-point rate hike. I'm sorry, of a 3/4 point rate hike in June. But of course, that can all change with one CPI print, right? CPI comes in far below estimates, and that changes the whole equation, right? So, I guess we'll have to wait and see here going forward. Do you have a tip of the week for us, Jim? Should we get there?
Yeah, let's do it.
All right.
And we pretty much just said it, right? We just went over it. It's, FOMC's today. Keep an eye between now and Wednesday. Keep an eye on the point of control. That's that golden histogram bar. You don't get it in equity trading. You don't get it in Forex trading. You get it in futures trading. You get to see the whole field, where all the liquidity is, where the pool is. And that's the unique thing about futures markets. But keep an eye on it, because a lot of times from Monday to Wednesday, we end up back at that area, and maybe tomorrow's point of control is a little bit different, but you could average them together and you could get a sense of what the market's thinking from a long-term point of view, and maybe take advantage of it. So that's the tip of the week. Just keep an eye on where all the volume is trading over the next few days.
Okay. Any questions for Jim on any futures market? Drop it in the chat. Jim trades most of the major futures markets. Jim, do we actually have any trades on right now, or no?
Well, no, but I noticed the question MD asked about China reopening. So the copper futures market is a really good indication of what's going on in China.
Why is that?
Because they consume 40% of the global copper. They need it for not only their domestic production, but also for components on things they export. And they're just a huge user of copper. And when their economy is shut down, copper price, the demand for copper is way less, and the prices are breaking, like we saw in the daily chart, big time. So this is a good kind of heads up market, even if you're not trading it, to get a sense of what the market's telling us about what's going to, when's China going to reopen, how it's going to reopen, and all that stuff. When China's back, reopen again, I expect copper prices to go up.
That's really a real interesting point there. All right, I haven't really ever used copper as a proxy for China, but it's probably good. The reason that I prefer using whether it's like ETFs or futures as proxies as opposed to like an individual stock is with a futures market or like an ETF, you don't get that company risk, right? Like there is no company risk when it comes to copper, unless you're buying a stock in a copper company, right? But this is just a copper market, and the only people that are participating are people that have a bullish or bearish take on the market on copper itself, and not the performance particular company and their
Yeah.
balance sheet and their earnings, and there is none of that stuff, right? So,
Well, yeah, no, I mean, you're right. There's not that direct 100% correlation, but remember, 50%, this is domestic stats here, 50% is used in construction, 30% in electronics, and then electronic cars is a subcomponent of that. So
sure,
as we go, it's kind of ironic too, because to produce copper, you got to mine it, and then you got to process it. And it's very intensive from an energy point of view. We're talking conventional, not green energy, right? Carbon-based energy to produce it, and then it's used in electric cars and green energy. So it's interesting, when you think about what's the payback there from a net energy point of view. I don't know. I never saw a stat on that, but that's a thing. So it will affect some stuff for sure. Now, also the micro copper futures are coming out today, and it's going to be a really nice market to trade.
Can you talk about that for a second? I think you mentioned that last week as well.
Yeah, so they launched today. I have so the way the CME works is they have large size contracts for most asset classes, and then they have smaller size contracts as well, so that more people could participate, right? Because the margins are less, you don't have to put as much risk capital up and all that stuff. Today's the launch of what's called the micro copper futures, and you can see my symbol on the lower right here. It's M, where my pointer is under the metals category of my quote board, MHG, and so far it's done about 1,800 contracts. It's small, but it's not bad for the first day. I'm really eager to see this grow. I'm really eager to see this particular contract get bigger and bigger over the next several months. So I'm excited about it. And now it makes it easier for the smaller trader, which I'm one of them, to participate in.
Yeah. Awesome. All right. Were there any markets that we wanted to hit on that we didn't already? We did not yet talk U.S. dollar index futures. We didn't talk Treasury futures. We didn't talk lumber. I don't know if we still care about that. We didn't look at the ruble, the euro. I don't know if we care about any of that stuff. Do we?
Well, let's go. The dollar index, though, is really fascinating. This market it's finally has a 3 days here where it's kind of the bodies of the candle hit a high, but bull market here. And I think this is, as far as I can tell, the relationship between the U.S. central bank and many of the other major central banks we're more hawkish, right? And that higher interest rate outlook versus the lower interest rate, slower roll, more dovish on the other side of the currency crosses is causing this huge appreciation in the U.S. dollar index. I'm still bullish here. I expect to break out to hit new highs because that differential can't change just by snapping a finger. Yeah, central bank could do something surprising, but that's not in the nature of central banks.
Mm-hmm. Mm-hmm. All right, let me check on the chat here. Was there anything? Nope, I don't see any other questions. All right, Jim, as I said, a lot happening right now. A lot of macro things coming out. Last week when we spoke, I believe we were both. You were pretty bearish, and things only got worse from there last week. So I certainly hope that it's not a repeat next time around. But I hope that next time we speak next Monday, the market at least is at the very least the VIX goes down, right? At the very least it's less turbulent. But hey, you don't necessarily care because you play both sides. So I guess it's all good to you.
Yeah, well, that's a good. We didn't even talk about the VIX 35 today. That's pretty high.
Yeah,
it's pretty high.
All right, Jim Cagnina, Senior Education and Training Specialist for the NinjaTrader platform. If you guys have not checked out NinjaTrader and you are interested in trading futures, I highly recommend it. They are the Benzinga Kentucky winner for best futures trading platform. You can use the link that's on the ticker at the bottom /events to get more from Jim and attend his webinars and educational sessions there. The platform itself can be found just NinjaTrader.com. Jim, any final thoughts for us?
Yeah, if I got a couple more seconds.
Yep.
Starting at the end of this week on that events tab, there's going to be several new shows that we're producing at NinjaTrader. One of them is on technical analysis, And the other one is on individual products, right? That the CME has and other exchanges have. Those are going to be midday shows. They're going to be on the events at that events page, and you'll see more and more stuff coming from NinjaTrader. It's going to be really good, good stuff.
All right, Jim. A pleasure as always. We'll talk to you again next week. Hopefully, things are looking a little bit better.
All right, sounds good, Spencer. Thanks for your time today.
Yep. All right, and on that note, we got to wrap because we got to go over to Benzinga Live, myself and Aaron Bree. So I'll catch you guys over there. Everyone smash that like, please. Get a few more likes here. We're low on the likes today. Get that up to 100. And I'll see you guys over on our next show. So stay tuned for that, and see you over there.